Welcome. We're here to break down the big, complicated world of finance into simple, powerful steps you can actually use. Today, we're demystifying one of the most popular tools out there, mutual funds. All right, listen up. In the next few minutes, you have a chance to completely change how you think about money. This isn't just about spreadsheets and charts. It's about unlocking your financial power. I want you to ask yourself a serious question. You work hard, right? Day in, day out. But is your money doing the same for you? Or is it just kind of sitting there? Well, we're going to fix that. So, the first big idea we need to get our heads around is that there's a huge difference between just saving your money and actually making it work for you.
Let's break it down. Saving is awesome. It's about safety, about preserving what you've earned. It's absolutely the first step. But investing, that's the next step. That's when you aim to actually grow your money, to earn profits on it. Saving is playing defense. Investing is playing offense.
So why isn't saving enough on its own? Well, there's this silent thief called inflation. It's what makes everything, gas, groceries, you name it, more expensive over time. So that money sitting in your savings account, it might feel safe, but its actual buying power is secretly shrinking every single year. Investing is your best weapon to fight back.
Okay, but hold on. Before you put a single dollar into anything, you have to know your why. Seriously, investing without a goal is like getting in a car and just driving aimlessly. Your goals are your destination.
And look, this quote right here, it absolutely nails it. Every single financial move you make has to start with a purpose. That why is the foundation for everything else.
So what could that why be? Maybe it's making sure your kids can go to a great college without being buried in debt. Or maybe it's that down payment on your dream home. Or just a retirement where you're not just getting by, you're actually thriving. Whatever it is, you've got to define it.
All right, so you've got your why. Now let's talk about the how. For so many people, one of the most powerful and accessible ways to get started is with a mutual fund. So what in the world is a mutual fund? Think of it like a big investment basket. Instead of you trying to pick individual stocks or bonds, a mutual fund pools money from tons of investors, people just like you, and buys a whole collection of different investments all at once. And here's how it works, in a nutshell. You and a bunch of other people put your money into the fund. Then, a professional fund manager, someone whose entire job is to research and pick investments, takes all that pooled money and invests it. They spread it out across lots of different things, which is called diversification. And you own units, which are basically your little slice of that big, professionally managed.
Now here's the thing. Not all mutual funds are created equal. They all have different goals. You wouldn't use a screwdriver to hammer a nail, right? Same idea here. You need to find the right fund for your specific goal. This table gives you a super simple breakdown. Looking for long-term growth and you're okay with a bit more risk? You're probably looking at equity funds. Need more stability and maybe some income? Debt funds could be your thing. And if you want a little of both, well, that's where hybrid funds come in. It's all about matching the fund's purpose to your purpose.
So you might be asking, what's the big deal? Why are mutual funds so popular? Well, it's pretty simple. They solve some of the biggest hurdles for everyday investors. They help you invest smarter, not harder. And hey, just so you know, this isn't just our opinion. We're drawing these key ideas from really solid authoritative sources, like the NISM workbook you're seeing right here.
So what are these big advantages? Well, for starters, you get instant diversification without needing a ton of money. You get a full-time professional managing your investments for you. You can see exactly what the fund owns. It's easy to get your money in and out. And maybe best of all, you can start small by investing regularly.
Let's just double-click on that last point for a second. A systematic investment plan, or SIP, is an absolute game changer. It means you invest a fixed amount automatically, say every month. This helps you build the habit of investing and can even out the ups and downs of the market over time. It's discipline automated.
We've covered a lot today, but if you remember one thing, let it be this. The funds, the stocks, the numbers, they're just tools. Your real power, your most valuable asset, is your knowledge.
And here's the thing about knowledge. It's meant to be shared. If this helped you, if a light bulb went off, think of one person in your life, a friend, a sibling, anyone who you want to see win. Share this with them.
Because that's the real goal, isn't it? When we help each other understand this stuff, we all get stronger. We all grow. It's how we all win. Let's understand together so we can all grow together.